Well, thanks for tuning into the trade setup. I'm Neeraj Shah, and the Fed has kept rates on hold. And look at the equity markets. So the Dow reacted widely, if you will. The others didn't. To my mind, when I saw the flashes and the fact that Jerome Powell has said that rates are any kind of rate cuts are at least 2 years out, I thought this was probably the most hawkish undertone that we could have anticipated relative to expectations. But I think the person who can put this best into perspective is Jeffrey Dennis. He joins us right now on the show. Jeff, great having you. Thanks so much for joining in. Good evening.
Thank
Uh,
you.
what did you think of the Fed decision and the commentary from Jerome Powell?
Well, as you said, it was the big change in a way was the extraordinary comment about not expecting rate cuts for a very long time. The market, of course, until quite recently, was expecting rate cuts before the end of this year. Now, I never was, to be fair, and now they've been pushed back a long way. And I think it's a very dangerous thing to start saying we're not going to cut rates for 2 years or something, because you just don't know what's going to happen to the economy. And also, you don't know what's going to happen, obviously, to the inflation rate. But the actual decision itself today was as expected, and I think perhaps the sense of it being a hawkish pause or a hawkish skip, if you like, is not only the commentary on rate cuts, but also the fact that the Fed is now clearly penciling in two further rate hikes between now and the end of the year, which means that begs the question, if they think they're going to have to do that, why don't they carry on now? So I think the whole thing is a little odd once again. If they really, as I say, if they really want to raise rates two more times, they should probably keep going now. But at the end of the day, this was a decision that was widely expected.
Yeah, but that's the point, Jeffrey, that it kind of muddled waters now because you expect two hikes. You don't know when they come because why should this be a pause in the first place? And then you might be on a prolonged pause at a high interest rate. What does that do for risk assets?
Well, I think first of all we need to sort of analyze why they're talking about potentially why they're talking about a pause or a skip or whatever. Number one, I think the very legitimate argument would be that monetary policy, as Milton Friedman always said, operates with long and variable lags, and there clearly is some evidence now that the economy is starting to lose a little bit of steam, and maybe they want to hold and wait for another 6 weeks until the next meeting to take a look at that. And then the other thing is that obviously they are still concerned about core inflation. I think it's fair to say, and although the inflation rate is coming down very sharply now, will again fall sharply in June year on year, the core inflation is still not behaving all that well, and that would be a reason for waiting now, perhaps, and then possibly moving again later. Now, I still have the view that the economy is going to steer its way here between the risk of recession, or at least a decent recession, and inflation remaining too high, because there are elements of core inflation, notably shelter, that will come down over time. And I still believe that probably at best we have no more than a one more 25 basis point increase. And I've liked to risk assets all the way along the line, as you know, Niraj, and I still like risk assets. And I think that we've seen a very nice run recently in US equities and, of course, in emerging market equities. And I think that I would expect that run to continue unless you get really some nasty surprises on the inflation front, notwithstanding the fact that core inflation is still pretty high at this point.
Yeah. And hence, my final question, Jeffrey, if we assume that inflation doesn't misbehave, but we know that the Fed has now shown its hand that it is not in the favor of cutting rates, at least, even if it doesn't hike too much, except the two that they've spoken about. And then if you have the economy firing and earnings coming up, do you think that's the recipe that you're looking for when when you're speaking about the bullishness that you are?
Yes, to a certain extent, I think that's right. I mean, I think the danger would be if you've got a firing economy, as you say, and you've got, even if inflation does come down further, although it's going to take a long time, I think, for it to get to 2%. It really is going to take a long time to get to 2%. Probably not until the end of next year at the very earliest. But the danger could be that actually, things might start to get a little bit too hot again, if you like. So I think the ideal Goldilocks scenario is some weakening of the economy, some gradual further decline in inflation towards that 2% level. And that's something that I think is probably going to happen. And I think as that happens and we get nearer and nearer to the Fed peak, the dollar will begin to drift off again, and that will begin to move money back towards the emerging markets again. Emerging markets have had a very nice run again so far in June. They're up now, back up to plus over between 6 and 6.5% on the year, and I think that's very, very helpful. I still believe that EM could go up by nearly 20% this year, possibly. And so my risk profile is really probably not a super strong economy, but more of a subdued economy, which I think is probably what you're going to get with further modest declines in inflation over time, which will ultimately allow the Fed to stop tightening, but obviously not quite yet.
Last question, Jeffrey, of the Fed conversation. There's a lot of attention towards the Apple move to India and the talk of moving one-fifth of its supply chain to India. What have you heard in the recent 2 to 3 to 4 odd months about the FDI moves into India,
Well,
if
I
anything?
think for sure that there is a lot of this talk going on, of course, and I think it's focused to a certain extent also on Mr. Modi's visit to the U.S. Next week, which is state visit to the U.S., which is going to be very, very important. And I think, although it's being framed so much as a geopolitical event in order to nail down a U.S. ally, in some senses, is in opposition to the current disputes that are going on with China. I think we need to see it much more in terms of framing the economic debate. In other words, India needs more manufacturing industry. We know that it's got a low share of manufacturing industry to GDP compared to a number of other countries, and certainly China. The U.S. needs to diversify its supply chain. It's doing that quite effectively already to places like Vietnam is the obvious one. But I think to see an increase in India-US trade would be very, very important for the Indian economy, and I think also for the sense of comfort the US has got about not being overly reliant on China. I mean, China's still going to be there for sure. They're not going to be, you're not going to see massive disinvestment from China. But I think that's all going to encourage foreign direct investment to come into India. And here is still, and we've discussed this before, Neeraj, here is still an economy now in India, which is now the biggest economy in the world in terms of population, where GDP per head is still very low. The potential is frankly enormous. And I think the US wants to be part of that, as do other countries. And so I would expect to see not only Apple, but a number of other countries beginning to build some investment potential in India in order to benefit from low wages and, as I say, to diversify out of China, where clearly the evidence is now that there was too much focus.
Got it. Jeffrey, always a treat talking to you and get your views. Thanks so much for that today. Have a great evening.
Thank you. Take care. Thank you.
Thank you. And viewers, that's the view from Jeffrey Dennis. Now, what's the trade setup, therefore, for the day looking like? Remember, the SGX Nifty should be showing even Stevens, maybe marginally lower, if you will. But, marginally lower, about 18,806. Now, the key is that the improvement in macroeconomic data should be supportive of risk assets over the near term. And the momentum may well continue that we've seen in the last few days. But this Fed decision kind of puts a bit of a lid to my mind in the very near term. Banks continue to lag optimism. The PCR is consistently lower since the last 8 days. And you want to ask yourself, if banks are not in an uptick, if IT is looking weak, and if the Fed has sounded as hawkish as you would have anticipated ahead of the policy, is there a case for the Nifty to move higher from where we are right now in the very short term? I would suspect that the answer is a unequivocal resounding no, but who knows? Metals are in a strong spot, you have to admit, and they've had a bit of a run, so you may see a bit of a consolidation. You never know, a day or two or thereabouts. But that pocket remains very supportive. N. Jayakumar in the conversation on Talking Point yesterday laid it out beautifully, and you might want to hear this piece about metals. I mean, the arguments are what do you say, have some bit of, have a lot of merit, uh, the ones that Jakes was making. It's a good conversation. You might want to hear it. Now, in light of this, and remember, FI is bought in yesterday as well, so that number continues to look okay. But let's now get in the stocks to focus on, and I'll start off with Axis Bank. Bloomberg reports that Bain Capital is going to sell up to $267 million worth of stake at an offer price range of 964 to 977. So do watch out for Axis. It was making a beeline for the 1,000 mark. Maybe a bit of a pullback today. Let's wait and watch. Then HAL is the other one in focus. GE and HAL would build engines in India. This is a part of the Make in India uh, initiative, if you will, that the current dispensation is trying uh, with all vigor, and it's meeting some resounding success. This is probably one more sign of that. So this will be important from a HAL stock perspective as well. We don't know when this starts, but it's a big announcement in itself. SJVN, we've signed an MOU. It's just an MOU, by the way, viewers, with Maharashtra State Power Generation Company to develop 5,000 megawatts of renewable energy projects. So do watch out for SJVN. Today may react. It is just an MOU, but it's a big amount. So let's wait and watch. Then HCL Tech, a company in Google Cloud, have expanded partnership to boost innovation and adoption of generative AI. Maybe not stock moving, but interesting announcement nevertheless. There's also, of course, a few stocks in focus. Sangam Industries, Sangam India, actually, it's not industries, but be that as it may, up 17% yesterday, volumes about 9.3 times. VMart up 6%, 8.5 times volumes. Heredba, 12.77% uptick in pricing, volumes up 7 times nearly, and fact up 14.5% yesterday with volumes about 6 times higher. So big price and volume action seen in some of these stocks, and in a couple of these it was because of the bulk deals that happened. So let's get the bulk deal data first before we talk about the others. So VMart, up yesterday. Amansa Holdings has bought about 3.37 lakh shares, VMart shares via bulk deal. So that was the reason why. And Amansa is as smart a name as they come, Akash Prakash. So you might see some action continuing in VMart. You never know. Though it's a soft day, so you never know about the follow-ups. Then let's get some of the others as well. Sangam, right? Madhuri Madhusudan Kela, which is Madhu Kela, buying about 8.4 lakh shares, 1.67% at 268 rupees a piece. So that stock was in focus. Because of that, there's also, I think, a SocGen deal and another one, Orient Pro, Malabar India Fund. Yes, Sumit Nagar's Malabar India Fund bought about 2.63 lakh shares at about 880 rupees a piece. So that's the third one. And I think SocGen bought into Wellspun, if I'm not wrong. Okay, D-Link, Ashish Kacholia sold about 3,69,000 shares. So this one sell deal that came in. Surely somebody was the buyer. I don't have the buyer's name handy, but Ashish Kacholia is the more famous name out there. And since he sold, I thought I'd bring it to you. Some brokerage calls. Actually, there was a SocGen deal wherein they bought into Wellspun, so that's the other one to keep in mind. And then some brokerage calls. Apollo Hospitals rated a new overweight at JP Morgan, target 5950. Fortis Health rated a new overweight at JP Morgan again, price target 355. So some upsides there, particularly in Fortis. And Tata Chemicals cut to an equal weight at Morgan Stanley, price target 916. That's about a 6 or a 7% downside. On Apollo, about an 18-19% upside, if I'm not wrong, from the current market price. So three key brokerage names that I thought that I should bring to the attention of our viewers. So that's the long and short of the trade setup today. Thank you so much for tuning in. A clutch of conversations, including Sumit Jain at Talking Point at 10 a.m. and Alpha Strategist, the monthly Alpha Strategist conversation with Ashish Shankar and Nitin Shanbag at 12:15 p.m. A bunch of other conversations with my colleagues Hiral and Alex lined up during the day. Do you tune in for all of these? Thanks so much for tuning into the trade setup.